Welcome to Market Brief After Hours. We have a massive amount of ground to cover today, from record-breaking highs on Wall Street to some truly staggering shifts in the currency and crypto markets. Let's just dive right in. The phrase of the week seems to be the everything market. What exactly is happening with U.S. equities?
It has definitely been a wild ride, but a highly profitable one for Wall Street. Despite a lot of underlying volatility, we've just capped off a very strong winning week. The Dow Jones Industrial Average gained 294 points, which is an increase of 0.58%, to close at a brand new record of 50,580.
And the S&P 500 and Nasdaq followed suit?
They did. The S&P 500 rose 0.37% to settle at 7,473. That is actually its 8th consecutive winning week, which is its longest weekly win streak since late 2023. Meanwhile, the Nasdaq Composite climbed 0.19%, ending the session at 26,344. It's worth noting that while all three indexes closed in the green, they did finish slightly off their intraday highs.
What is the primary catalyst driving these numbers up right now?
A big part of it is easing Treasury yields, which took some pressure off equities. The 10-year Treasury note yield shed nearly 3 basis points to sit around 4.56%, and the 30-year bond yield dropped more than 4 basis points to about 5.06%. Earlier in the week, bond market volatility was really weighing on stocks because the 30-year had hit its highest level since 2007.
And that earlier volatility was heavily tied to geopolitical fears, specifically the U.S.-Iran conflict, right?
Exactly. Traders were terrified that a prolonged war would keep oil prices artificially high, which puts massive upward pressure on inflation. But heading into the weekend, the market sentiment shifted. Brent crude futures rose 0.9% on Friday to close at $103.54 per barrel, while West Texas Intermediate inched up 0.3% to settle at $96.60. Brent fell over 5% on the week, and WTI lost more than 8%. Trump's decision to call off imminent strikes on Iran to allow for negotiations really took the wind out of the oil bulls' sails.
That brings us to a massive development in Washington. Kevin Warsh was just sworn in as the new chair of the Federal Reserve. How is the market digesting this?
It is a very complex dynamic. He is stepping into the role at a highly tumultuous time, and he's facing a president with very specific, vocal expectations about cutting interest rates. However, brokerages like Nomura are actually predicting the Fed will have to hold interest rates steady throughout 2026.
Why hold them steady if the pressure is on to cut?
Inflation is just too persistent. Nomura cited rising pressures from the Iran war and a widening global memory chip shortage that is directly spilling over into consumer prices.
Which perfectly explains the latest consumer sentiment data. Wall Street is hitting record highs, but Main Street is painting a very different picture.
A drastically different picture. The University of Michigan's Consumer Sentiment Index just plunged to an all-time record low of 44.8 in May. That is down from 49.8 in April. The cost of living is completely dominating the public mindset. According to the survey, 57% of consumers spontaneously mentioned that high prices were eroding their personal finances. Expectations for inflation over the next year actually rose to 4.8%. So there is a massive disconnect between equity market performance and everyday affordability.
Let's look across the Atlantic. How did the European markets react to the geopolitical news and their own economic data?
Europe actually had a very strong showing, notching a 4th consecutive day of gains. The Pan-European Stock 600 finished the day 0.8% higher.
Can we get a breakdown of the major European countries?
Certainly. In the UK, the FTSE 100 closed up about 0.2% to 10,466, which is its highest since late April. Over in France, the CAC 40 index rose 0.51% to close at 8,127. Italy's FTSE MID gained 0.70%, closing at 49,511. Germany had a particularly strong day, with the DAX 40 rising 1.2% to close at 24,889. Finally, Switzerland's benchmark SMI ended with a gain of 0.42% at 13,503.
Were there any specific economic indicators driving those regional moves?
Germany offered a real glimmer of hope. Their GDP grew 0.3% in the first quarter, and their business climate index unexpectedly rose in May, defying analyst predictions of a decrease. France also saw its manufacturing business climate index rise to a 4-month high. However, the UK struggled a bit on the data front. British retail sales volumes fell by 1.3% in April, largely due to rising energy costs, and their public sector net borrowing widened significantly more than markets expected.
We are going to take a quick break, but when we come back, we will dive deep into the currency markets, check out the moving averages, and look at the biggest individual stock movers of the week. Stay with us. Welcome back to Market Brief After Hours. Before the break, we covered the broader indices. Let's pivot to Forex. It sounds like a highly technical week for the major currency pairs. Let's start with the euro against the dollar.
The Euro-USD pair is facing heavy selling pressure. It closed at 1.1607, down 0.10%. If we look at the moving averages, the near-term structure is very bearish. The price is currently trading below the 50-day simple moving average, which sits at 1.1654. It is also below the 100-day SMA at 1.1699 and the 200-day SMA at 1.1681. Sellers are firmly in control here, and unless we see a daily close above that 50-day average, the bearish bias remains totally intact.
What about the British pound?
GBP USD is showing a bit more indecision. It edged up slightly by 0.09% to close at 1.3441. It is testing a very crucial support zone right now. The price is interacting closely with the 50-day SMA at 1.3435 and the 200-day SMA at 1.3424. However, it remains below the 100-day SMA at 1.3478. If it can hold above the session low of 1.3413, it might form a base for recovery. But a sustained break below that 200-day average would trigger renewed bearish momentum.
Moving north, the US dollar against the Canadian dollar has been on quite a run. What's happening there?
USD CAD extended its recovery, rising 0.26% to close at 1.3813, fueled in part by Canadian producer prices jumping 2.0% month over month. The price is currently testing the major 200-day SMA boundary at 1.3811. Over the last few sessions, the pair has comfortably cleared its 50-day SMA at 1.3744 and its 100-day SMA at 1.3721. The momentum is decisively bullish right now. A clean daily close above the session high of 1.3822 would confirm a breakout of the 200-day SMA, opening the door for further gains, while a drop back below the daily low of 1.3767 would suggest exhaustion.
And USD JPY. It seems the upward grind is continuing.
Yes, USD JPY rose 0.15% to close at 159.16. This pair remains in a beautifully aligned bullish structure, trading comfortably above its 50-day SMA at 158.74, its 100-day SMA at 157.52, and its 200-day SMA at 154.74. With the price pattern forming higher highs and higher lows, the bias remains clearly to the upside. Immediate resistance is right at the daily high of 159.23, and if we break that, a retest of 160.00 is highly likely. On the downside, the 50-day SMA at 158.74 is the critical line in the sand for the bulls.
Let's quickly touch on precious metals while we are looking at technicals. How are gold and silver behaving?
Both are under pressure. Gold closed at $4,508, down 0.75%. It is trading well below its 50-day SMA of $4,666 and its 100-day SMA of $4,789, though it is still above the long-term 200-day SMA at $4,352. Silver took a harder hit, surrendering ground to close at $75.55, down 1.46%. Silver has actually slipped below its 50-day SMA of $75.96. It remains far below the 100-day SMA at $81.09, but still above the 200-day SMA at $65.22. Downward momentum is lingering for both metals.
Let's wrap up with the major market movers. Who were the big winners and losers in the equity space this week?
The tech sector had some massive breakouts. Dell Technologies was the absolute standout, closing up more than 16% to lead the S&P 500 gainers. That surge came after Wells Fargo Securities raised its price target on Dell from $180 all the way to $270.
That is a massive price target hike. Any other big jumps?
IMAX Corp closed up more than 15% following reports that the company is exploring a sale and has approached potential buyers. Estée Lauder also had a huge day, closing up more than 11% after its proposed merger with Puig Brands fell apart over compensation demands.
I also saw that chip makers had a fantastic Friday.
They did, and they helped lift the broader market. Qualcomm ripped almost 12% higher on Friday, closing up more than 11% to lead the Nasdaq 100. NXP Semiconductors closed up more than 5%, and Advanced Micro Devices, or AMD, closed up more than 3%.
On the flip side, the crypto space seemed to take a beating. What happened there?
It was a brutal end to the week for crypto. Bitcoin crashed below $76,000, dropping to a 3-week low. This caused a massive cascade of liquidations, with the total value of wrecked positions hitting $485 million. As a direct result, Coinbase Global closed down more than 4%, leading the losers in the S&P 500. The total market value of the cryptocurrency industry actually fell 1.5% to $2.55 trillion.
Were there any other notable losers on the stock side?
Take-Two Interactive Software took a hit, closing down more than 4% to lead the losers in the Nasdaq 100. That drop was triggered by their 2027 net bookings forecast, which came in between $8.0 billion and $8.2 billion. That was well below the market consensus of $9.11 billion.
Incredible insights across the board today, from the macroeconomic shifts with the Fed to the technical breakdowns in Forex. It has been a truly historic week for the markets. Thank you for walking us through all of it.
It is a highly complex market environment right now, and staying on top of these moving pieces is more critical than ever.
That is all the time we have for tonight. Have a great weekend, everyone.
If you find this useful, please follow Market Brief After Hours.